Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. It's probably inevitable, but as we shift increasingly into a world of digitalisation and AI, bank customers are wanting more of a personal touch, and that's particularly true for small and medium-sized businesses. My guest today is the leader of a challenger bank operating in a space dominated by the Big Four. Bank of Sydney was founded back in 2001 and as it's grown has increased its focus on SME clients. Melos Sulicich is the CEO of Bank of Sydney, which works with Blue Chip Communication, a great supporter of this podcast. He joins me in the studio. Melos, welcome to Fear and Greed.
Thank you for having me, Sean.
Give me the elevator pitch on Bank of Sydney.
Bank of Sydney started in 2001. It was then called Lakey Bank. It was set up by a Greek Cypriot bank in 2001. And now it's just a bank, a foreign-owned bank in Australia, operating principally in the SME market. So we have a lot of business lending on our books, but also a lot of home lending, which is attached to small businesses across the country.
How does a challenger bank compete against the Big Four?
Well, it's always hard operating against the Big Four. They really are big banks in world terms. But from a small banking point of view, we are focused on helping people create genuine value. So we've got relationship bankers out in the market who are working with their customers to help their customers create value, looking after their customers in times of need, and also looking after their customers when their customers need something and see an opportunity.
Okay, can we just take a step back here? So we all are very familiar with the Big Four banks. You're a foreign-owned bank as opposed to a locally owned bank, right? Not that that really matters that much. But all banks, when you have the word bank attached to your name, you have, the rules and regulations that the regulator sets are as relevant to you as they are to Commonwealth Bank, correct? So I'm just thinking in terms of safety and that type of thing.
Absolutely. So to get a banking license is really hard. To maintain your banking license is really hard. You have to have strong capital ratios. So we've got a 20% capital ratio. You have to have strong liquidity. You have to have the best risk management systems in the country, in the world. We've got a very strong regulator in Australia, in APRA, and APRA do a wonderful job of regulating banks and keeping banks strong. And so we're all strong, but competing for a small bank, competing against large banks, you have to be different. Mm-hmm. And we see our difference as being able to provide a strong relationship model to our customers. So the bankers we've got are very experienced. They've all been here a long time. They've all got a lot of scars on their back from things that they had to do in the past with customers, and they help their customers through the good times and the bad times. We've got a very, very strong credit department. As I said, the bank's been going in since 2001. We've actually never suffered a loss. Credit loss in that time.
Never suffered a credit loss?
Never suffered a credit loss because our credit department are, in my view, the best in the country. So they can actually help customers structure a deal in the right way, and the SME customers structure a deal in the right way that looks after the customer and looks after the bank at the same time as well. So you can be assured that if we're lending you money, we're confident that you can pay it back, because we only want to lend money to people that can pay it back.
This sounds very one-on-one, and I'm trying to put that in terms of AI and technology, which all the big banks particularly are spending a lot of money on. Where do you sit? Where does Bank of Sydney sit in terms of the need for personal relationships backed by technology as opposed to technology relationships backed by personal?
So if you're going to have a relationship-led bank, you need to be cost-effective. And so having back-end technology, and the best back-end technology is paramount, because it can help take out back-end costs. Now, we are right in the middle of doing the largest project that we've ever done in the bank in replacing our core banking system and our internet and mobile technology as well. So we need to have very strong customer-facing technology, which has got some AI components to it as well, because everything has got some AI component to it nowadays, but also a very efficient, and in our case will be a cloud-based core banking system, which means that we remove a lot of the operational technology requirements from us, and that goes to our provider, and they do it at scale. So we get scale benefits while still being a small bank. That's really critical because we have to reduce our costs in the back end, which is not really customer adding value, to be able to add value to our customers at the front end by having these experienced bankers and credit people that they're able to talk to them and help them.
What I think is interesting, the three of the big four reported recently, their growth in SME is, I think it was 5-6%. Market was much, much higher than that. So it does seem that the challenger banks, it's a big group, seem to be growing market share as one. I mean, obviously some will be doing well, some won't be doing so well. Actually better than those big four.
So our SME banking book grew by 17% last year. How did we do that? We actually increased the number of our frontline bankers by about 40%. So a lot of investment in frontline bankers and credit people to get out and meet more customers to be able to do more business. And that was 17% growth in that part of the business last year, 20% growth in deposits as well. You got to have deposits in order to be able to lend the money out. And we're a 100% deposit funded bank, so we don't have any wholesale funding in our funding stack. And so getting deposits is important for us. So having people on the front line talking to those customers who have money to deposit in the bank so that we can then lend it out to people who need to borrow it to see an opportunity.
Melos, stay with me. We'll be back in a minute. My guest this morning is Melos Sulicich, CEO of Bank of Sydney. So, clearly you know a bit about SMEs. What are the biggest concerns for your customers at the moment?
I think the biggest thing that customers are feeling at the moment is uncertainty. So through the course of this year, the election campaign effectively kicked off on the 1st of January. Election campaigns always cause some uncertainty in people's mind. And as we got through the election campaign, you see a lot of uncertainty now coming out of the US with tariffs and those sorts of things as well. And that's the thing that's causing our customers to think really hard about what they do. Uncertainty is not a good thing for business. Mm-hmm. Because uncertainty gives you a question mark over what you're going to invest in. Do I invest? Do I not invest? People are looking for more certainty. So from our politicians locally here and internationally, they're looking for more certainty to be able to give them the confidence to invest. Business is actually going quite well for most of our customers. In fact, all of our customers are going really well. We've got a lot of developers on the books who are building housing. That's going really well. We've got retail customers on our books and their businesses are going really well as well. But they're all looking for certainty in the economic and political environment.
What about the interest rate cut recently and the hopes for a couple more? Does that make much of a difference?
Well, that gives people more confidence, doesn't it? Because they can borrow more. They've got a bit more leeway between what their outgoings are in terms of their interest costs and their principal repayments as well. It means that they might have a bit more left over to invest in some more staff. I mean, small businesses have been sort of really watching their costs really tightly over the last couple of years in particular. We've had a very big inflation spike come through over the last few years. Now, that's eased off. But the cost of doing things is still more expensive than it was a few years ago. So people have watched their costs. So interest rates coming down are a really good thing for small businesses in particular. It gives them more confidence. It gives them more scope to invest and look for those opportunities that they've been looking for.
You mentioned that you've got a bunch of construction customers. It's surprising then you haven't had any credit losses. Like, obviously your risk team does a good job. But is that sector getting back on its feet yet?
There is a huge demand for housing. Yep. Huge demand for housing in the country. The one thing that we can't get enough of or build enough of or do enough of is housing. And so the customers that we deal with, now our business model has been built on working with people who are doing small developments, and we grow with them or they grow with us.
Yep.
And so we know the customers that we deal with, and we've got long-term customers. As I said, we've got some great bankers that have been with us for a long period of time, and they grow with their customers, and that helps us. So we understand the people and their businesses and what they're investing in. It also helps our clients because they get the confidence from us as well that they're not sort of going into something that's going to stretch them too much as well.
What about the regulatory environment? So sometimes you hear from the challenger banks that it's a bit unfair. The big banks get a better ride. Now you talk to the big banks and they're saying, well, some of the APRA regulations make it actually hard for us to lend to certain areas of the market. You don't do wholesale funding, so you're getting all your funding off deposits. So there's sort of comparative advantage for Bank of Sydney. But what is the regulatory environment like? Is it a level playing field, do you think?
We don't believe it's a level playing field. The regulatory environment artificially makes life tougher for small banks. The the number of regulations and rules and laws that all banks have to comply with are massive, huge, and that weighs itself heavier on small banks. Larger banks have departments of people looking after one small piece of regulation. As a smaller bank, we have to be sort of jack of all trades in terms of regulations and be across the whole lot of regulation. It's an unusual environment where you have smaller organisations in an industry being penalised with heavier capital weights than the larger organisations. So the regulatory environment's actually tipped against smaller banks. So the large banks get an implicit government guarantee on their funding. They get lower risk weights on their capital. And the two key things you need in banking is capital and funding. And so we think the environment's tipped a little bit too far against the smaller banks.
Do you expect that to change at all?
Well, there's a current review going on. The Council of Financial Regulators with the ACCC are doing a review into small banks at the moment, in the small banking environment. That review is due to be given to the Treasurer in the middle of this year, so that's a month or so away. And we understand there'll be some recommendations come out of that. So we're waiting for the outcome of that review. We've made some, we and the ABA and other banks have made representations to that review to look to see if something can be done to help make the environment for small banks better. Now, you have to remember that whilst there's sort of 4 or 5 large banks in Australia, there's another 50-odd small banks in Australia. The small banks have driven some of the innovation.
Yeah.
The core product in Australian banking is an offset mortgage or mortgage with an offset account. That was developed by a small bank and released by a small bank in the early 1990s to find a competitive advantage. It's unique to Australia, right? So, and it's one of our everybody in Australia that has a mortgage gets one with an offset account because it gives you flexibility.
Yeah.
Now, if it wasn't for small banks, we wouldn't have that. And so we believe that the innovation that can be provided by small organisations is wonderful for the Australian consumer, but we just need to have some of those shackles lifted a little bit.
Melos, thank you very much for talking to Fear and Greed.
Thank you. It's wonderful being here.
That was Melos Sulicich, CEO of Bank of Sydney. This is the Fear and Greed business interview. Join us every morning for the full episode of Fear and Greed, business news you can use. I'm Sean Aylmer. Enjoy your day.